The new U.S. administration has approved the Sentinel Midstream Texas Port, capable of shipping 1 million barrels of oil a day. The project, first proposed in 2019, had been held up for 5 years, awaiting a final authorization from the Transportation Department's Maritime Administration. Today we look deeper at developments in the oil and gas sector and the key drivers moving markets in that area. Hello, this is Body Oshosami on Global Business Insights, where we take a deeper dive at the main business headlines. Chinese President Xi Jinping today at a symposium with prominent entrepreneurs delivered a speech signaling a shift toward renewed support for the private sector. The European Commission are reported to be exploring tough import limits on certain foods made to different standards to protect its farmers, also echoing Trump's reciprocal trade policy. Japan's 5-year government bond yield rose to 1.034%, the highest since October 2008, and yen was also higher as Q4 GDP growth at 2.8% beat estimates. Now focused on Nigeria, we did get some data from the central bank ahead of its next Monetary Policy Committee meeting this week. That is on the 19th and 20th of February, where it is expected to hike interest rates, albeit at a lower pace than the previous month. And indeed, a pause could also be justified by the need to watch the rebased inflation data trends before further monetary interventions. According to the CBN Households Expectation Survey, the overall consumer outlook in January 2025 reflected decreased pessimism when compared to the month of December. The overall consumer index today at minus 23.5 is expected to improve in over the next 6 months to plus 7.7 as consumer sentiment steadily improves. Also out last week, CBN reported that the composite PMI for January was at 50.2 index points, indicating expansion in economic activities for the second consecutive month. Unlike the industrial and agricultural sectors, the services sector index indicated a contraction in economic activities for the month under review. Also, in the Inflation's Expectation Survey, 81% of businesses and households believe that energy costs, exchange rates, transportation costs, and interest rates influence their perception of very high inflation in the month under review, even as they are hoping to see the level of inflation to gradually reduce over the next 6 months. In a business expectation survey, the confidence index is expected to improve from 18.9 today to 43.3, also in the next 6 months, with the expectation of Naira gradually appreciating. Despite the main constraints affecting business confidence, that is high interest rates, insecurity, and epileptic power supply, there is a trend of improving capacity utilization. Now to our main deep dive in the oil and gas sector. While there is agreement that the global economy will see tepid, below average growth in the near term, there is less agreement on what that means for global oil demand. According to the International Energy Agency latest outlook reports, clean energy momentum will be strong enough to bring a peak in demand for coal, oil, and natural gas by 2030, although the trends vary widely across countries given the different stages of economic and energy development. But OPEC's World Oil Outlook reports a very different picture, driven by significant demand growth in the non-OECD nations, that's India, Middle East, and Latin America. Global energy demand will expand, according to the OPEC report, by 24% in the period to 2050, adding that there is need for investment and expansion in all energy sources with the exception of coal. To be precise, about $17.4 trillion of investments are required by 2050, of which $14.2 trillion is required for the upstream sector. OPEC say there is no peak oil demand on the horizon, with petrochemicals, road transport, and aviation driving demand growth. Also, in the February 2025 update by OPEC that was out just last week, analysts forecasted global oil demand growth for 2025 unchanged at 1.4 million barrels per day. OPEC analysis has not adjusted forecasts for global demand growth despite a potentially disruptive effect from a trade war. Nigeria crude production, according to the data, showed it was lower than the previous month by 29,000 barrels per day to 1.495 million barrels per day, also below the OPEC quota of 1.5 million barrels per day. Total OPEC plus supply fell by 118,000 barrels per day from December to January, according to secondary independent sources. Demand for OPEC plus oil also remains robust, according to the report. Last week, we continued to see high volatility as more bullish supply concerns clashed with bearish macroeconomic and geopolitical developments. U.S. sanctions are disrupting crude shipments from Russia to China and India, reinforcing tightness. Treasury Secretary Scott Bessent last week said the target, that's the U.S. Treasury Secretary, to slash Iran's oil exports by 90% to 100,000 barrels per day, down from its current 1.5 to 1.6 million barrels per day. Still, we cannot ignore the fact that Iran and Russia have proven over time that they can keep their oil flowing into the market irrespective of sanctions. But prices last week also fell sharply as we get rising U.S. inventories. U.S. Energy Information Administration showed crude oil inventories in the U.S. with a build of 4.1 million barrels during the week ending February 7. We also heard a somewhat hawkish Federal Reserve and the possibility of early resolution to the Russia-Ukraine war, both developments weighing on prices. The delay in reciprocal U.S. tariffs offers a temporary reprieve for markets concerned about global economic growth impacted by tariffs. But earlier last week, higher steel and aluminium tariffs escalated fears of a trade war that could weigh on economic growth, also hurting energy demand. Markets are playing the impact of a pro-fossil fuel U.S. with some calm. However, President Trump is not wasting any time. Less than a month in office, he approved the first LNG export permit since Biden's controversial pause last year and set up a new energy council to aggressively ramp up oil and gas production. Commonwealth LNG got approval to proceed with its 9.5 million metric tons per annum export facility in Louisiana, targeting markets in Asia and Europe. Trump also reopened over 600 million acres of offshore federal waters for oil and gas development, completely reversing restrictions imposed during the previous administration. And industry players are moving fast. Legal hurdles and environmental activism will slow down some of the momentum, but the regulatory roadblocks are fast vanishing. On oil prices, the U.S. Energy Information Administration EIA forecasts that the average price of Brent crude oil will be around $74 per barrel in 2025. This is a decrease from the projected average of $81 per barrel in 2024. EVI sees Brent range bound at $70 to $75, with risks tilted to the lower end, but with still a lot of volatility and uncertainty. Finally, to Nigeria, where the new Dangote refinery and its gasoline exports to the international market is expected to weigh further on the European gasoline market, freeing up gasoline volumes in international markets and resulting in rerouting extra volumes going forward. Dangote, however, cannot rely on NNPC for its supply in Naira, and it will be tapping into global markets, implying significantly higher working capital financing. It has not helped that Fitch last week said it will no longer provide ratings or analytical coverage for Dangote due to many unresolved issues associated with the pending refinancing of the company's maturing debt. In Nigeria, we have seen many oil and gas majors leaving the market over the past few years, despite opening the doors for wider exploration courtesy of the Petroleum Industry Act 2021. From about 2.1 million barrels per day, that was in 2018, Nigeria produced last January, according to the upstream regulator, 1.538 million barrels per day of crude oil, with another 198,783 barrels per day of condensates, according to the upstream regulator. Still far from the country's forecasted daily production of 2.06 million barrels per day for the year 2025. Also, last week, Nigeria, Algeria, and Niger finalized agreements to advance the Trans-Saharan Gas Pipeline project, which aims to transport natural gas from Nigeria through Niger to Algeria and then to European markets. Monetization of Nigeria's vast gas resources remains a major area of opportunity. Industry veteran Victor Eromosele commented on the issues facing the Nigerian oil and gas sector. This was in an earlier chat we had last year. Since 2020, after the COVID-19 pandemic, the country has struggled with massive oil theft, vandalism of oil assets in the Niger Delta, and years of underinvestment in the sector. Last October 2024, the federal government announced a target to further boost production to 2.3 million barrels per day by mid-2025.
Every African country has oil now. I think 54 of the 55 oil countries in Africa have oil. So Nigeria doesn't have the bragging right it had many, many years ago. And so we just have to step up and do things differently and do things smartly. You have a piece of legislation, make it work and make it work fast. We have to be more aggressive. We're not aggressive enough in terms of getting investment into our own industry. I've seen many years of the industry, and I can tell you that in the last few years, we've not really made as much progress as we made many, many years back. And the reason is we are not investing enough. You invest more and then you get more. When we choose to invest more, I'm sure we would. And then the second order reason is the fact that the PIA was delayed for many, many years. And now that the PIA is out, it's chicken and egg situation in the sense that in one way it enables, in another way it creates constraints. So how well are we using the PIA? How many new investors have we had? Not too many new investors, and even the current investors have had to have parts of the PIA tweaked in its implementation for it to work. So there's quite a lot of work for the authorities to do to move the industry forward. Recently, I'm sure you heard that when the CEO of Total Energies in a forum recently said, look, Nigeria, you do a lot of talking, but action is delayed. And that's why we're moving so many millions or so many hundreds of millions to other countries. But it's a good thing, too, that within the indigenous players are stepping up. As you do know, in a few years' time, 4 big players will now be stepping in the shoes of 4 IOCs. And that is a good thing by buying up most of the assets. In fact, it's said that about 75% or more of the assets in a couple of years' time in the Niger Delta, guess who will be the operators? Not IOCs anymore. They'll be indigenous players like Seplat, Chapal, Oando, and Renaissance. So that's a period to look at, and that will have its own challenges. We do hope we can rise to those challenges and move the industry forward.
Asia Pacific markets traded mostly higher as investors cheered Japan's upbeat economic growth data, also awaiting a slew of central bank decisions from the region this week. Well, that's all we can take on this episode of Global Business Insights. You can watch us on Business Day TV YouTube channel Monday to Friday at 11 a.m. West Africa time. Thanks for watching. This is Bode of Shosami. Bye-bye.